Stock futures surge after AI stocks plunge on valuation concerns. Live updates. A bustling trading floor at the New York Stock Exchange on November 6, 2025, where a trader monitors the market's reaction to key AI stocks' decline. Michael Nagel, Bloomberg, Getty Images. Stock futures experienced a notable surge on Thursday night, reversing a previous decline in U.S. equities. This turnaround was primarily attributed to a pullback in the market's leading technology companies, which had been under pressure due to concerns about elevated valuations. Futures tied to the Dow Jones Industrial Average, DJIA, soared by 95 points, or approximately 0.2%. Similarly, SP futures and NASDAQ 100 futures each rose by about 0.3%. Several prominent artificial intelligence (AI) stocks, including NVIDIA, Advanced Micro Devices (AMD), Tesla, and Microsoft, witnessed significant drops on Thursday. These declines had a substantial impact on the broader market, exacerbating the overall market downturn. The situation was further complicated by data indicating a surge in job cuts for October, marking the highest level in over 2 decades and making 2025 the worst year for layoffs since 2009. In the previous trading session, major U.S. stock indices closed lower, with the tech-heavy NASDAQ Composite dropping 1.9% and the Dow Jones Industrial Average, DJIA, shedding nearly 400 points. This week, all 3 benchmark indices have been in the red, with losses occurring intermittently since Tuesday when major AI stocks declined due to concerns about their elevated valuations, contributing to a highly concentrated market. The SP 500 has experienced a 1.8% decline for the week, while the DJIA and NASDAQ have lost approximately 1.4% and 2.8% respectively. Despite these challenges, some market participants remain optimistic that the end of the U.S. government shutdown and a potential December interest rate cut from the Federal Reserve could provide relief for U.S. stocks. Investors are also closely monitoring the Supreme Court's skepticism regarding the legality of President Donald Trump's tariffs and the progress of third-quarter corporate earnings results. Louis Navellier, founder and chief investment officer at Navellier Associates, expressed hope for a year-end rally once the government shutdown ends and the tariff situation is resolved. Navellier highlighted the upcoming NVIDIA earnings as a potential catalyst for reaffirming the AI narrative. He also suggested that a December Fed cut could lead to a high close for the year. However, he emphasized that corrections with these levels of gains are normal and expected, urging investors not to panic. The Bureau of Labor Statistics was scheduled to release the non-farm payrolls report on Friday. However, due to the government shutdown, this release was postponed for the 2nd consecutive month. Economists had anticipated a decline of 60,000 jobs and an increase in the unemployment rate to 4.5%. In other news, Tesla shareholders overwhelmingly approved CEO Elon Musk's nearly $1 trillion pay plan with 75% support among voting shares. The vote took place at Tesla's annual shareholders meeting in Austin, Texas, and a separate proposal calls for Tesla to invest in xAI, Musk's AI startup. The pay package for Musk, already the world's richest person, consists of 12 tranches of shares, contingent on Tesla achieving specific milestones over the next decade. This arrangement would also grant Musk increased voting power, addressing demands he has publicly made since early 2024. His ownership would increase from 13% to 25%, adding over 423 million shares to his holdings. The first tranche of stock is payable if Tesla reaches a market capitalization of $2 trillion, which is currently at $1.54 trillion. Tesla's stock performance over the past year has shown a positive trend, with shares up 10.4% for the year. In extended trading, several stocks moved in different directions. Take-Two Interactive Software shares dropped by 7% after Rockstar Games, a subsidiary, delayed the release of Grand Theft Auto 6 to November 2026, marking the second delay for the highly anticipated game. Airbnb shares rose by approximately 5% after the company reported strong third-quarter results and guidance, surpassing analysts' expectations. Affirm shares surged by more than 12% after the company beat on top and bottom lines, with quarterly gross merchandise volume exceeding forecasts. DraftKings shares declined by nearly 4% due to disappointing third-quarter results, with the company reporting a loss greater than analysts' predictions.